price still looks active. Candles travel. Volatility reacts. Ranges expand and contract. But activity alone does not relocate structure. And this week, that distinction became very visible. Because even though movement appeared active on shorter timeframes, the higher timeframe structure barely changed. To understand why, we have to begin with the weekly chart. Not with direction, but with location. On the weekly chart, one positional reference has dominated recent structure, the 0.33 level of the symmetric weekly low. For several weeks, this level functioned as a structural pivot. Weekly candles repeatedly interacted around this region, sometimes moving slightly above, sometimes rotating slightly below. But the important point is not the movement itself. It is the positional gravity around that boundary. Since February, weekly candles have continued rotating around the midpoint of the first February weekly candle box. The chart visually confirms this. Weekly candles move above and below that midpoint, but they have not established acceptance outside it. And even this week, although the close moves slightly away from the 0.33 area, the market still remains inside the same structural containment. The entire weekly interaction still sits inside the first February weekly box, and more specifically, inside the range of the first March weekly candle. That tells us something important. Movement occurred, but structural relocation did not. Now look at the moving averages on the weekly chart. The 120 moving average is flattening further. A flattening long-term average often reflects the absence of structural relocation. Price continues interacting with the same positional region long enough, that slope disappears. At the same time, the 20 moving average has crossed below the 120 moving average. But this crossing alone does not define structural transition, because the slope behavior still matters. When the long-term average is flattening, crossovers often occur inside compression environments. Instead of creating directional expansion, they increase interaction density, which means price spends more time negotiating the same structural area. This increases friction, and that friction becomes visible through volatility behavior. Next, look at the Bollinger Bands on the weekly chart. The 20 Bollinger Bands still maintain a downward slope. Both the upper and lower bands continue tilting lower. This tells us the larger volatility envelope still reflects earlier downward pressure, but the important detail appears inside that envelope. The 4 Bollinger Bands are compressing. This is crucial, because compression inside a broader volatility channel creates a very specific behavioral environment. Movement continues, but usable distance shrinks. And this week, that compression became visible in a very specific way. The upper wick of this week's candle stopped exactly at the 4 Bollinger upper boundary. That means reaction speed increased. Distance attempts were immediately absorbed. Continuation did not persist. Instead, interaction returned back toward the internal structure. This is not a directional signal. It is an execution environment, where tolerance becomes narrow and reaction speed increases. Now observe the RSI on the weekly chart. For several weeks, RSI has been interacting around the 30 level. This week, it moved slightly above 30, but not far enough to represent structural relocation. Instead, this behavior often reflects fatigue inside containment. Momentum attempts occur, but they stabilize quickly, which means continuation struggles to build persistence. When RSI remains near the lower region for extended time, yet fails to expand upward, the market often enters a negotiation phase. Pullbacks deepen before stabilizing. Continuation attempts stall quickly, and tolerance for error becomes narrow. Now step back to the monthly chart. March has not closed yet, so structural interpretation must remain conditional. But we can still observe the positional relationship. Right now, The March candle is forming inside the February candle. In other words, March currently represents an inside candle relative to February. This matters because inside candles often represent structural processing, not relocation. Additionally, price has moved above the prior downward trend line and is currently moving sideways around it. That creates a transition zone. But transition zones require confirmation, and confirmation only occurs after the candle closes. Until the monthly candle completes, structure remains unresolved. Looking further at the monthly indicators, we see an interesting combination. The 20 moving average is nearly flat, with only a slight negative slope. This again reflects positional negotiation, rather than clear relocation. The 20 Bollinger Bands are beginning to expand slightly, but the 4 Bollinger Bands show asymmetric behavior. The upper band is compressing, while the lower band had expanded sharply earlier and is now stabilizing. This type of configuration often creates uneven reaction behavior. Upper movement encounters quick resistance. Lower movement experiences sudden distance bursts before stabilizing. This uneven volatility environment creates execution friction. Continuation attempts may stall quickly. Pullbacks may extend deeper before stabilizing, and distance tolerance becomes inconsistent. Now move down to the daily chart. Here, the structure becomes even clearer. All recent daily candles remain trapped inside the range of the first March daily candle. This means the entire daily market is currently processing inside one structural container. Daily candles repeatedly interact around the 20 moving average, and that average itself is completely flat. When a moving average flattens inside containment, it usually reflects rotational interaction. Price repeatedly negotiates both sides of the same reference. This is exactly what the chart shows. Daily candles move above the average, then back below, then above again. But they do not persist away from it. Volatility behavior on the daily chart confirms this containment. The 20 Bollinger Bands are flat. The volatility envelope is no longer expanding. Instead, it is stabilizing. And inside that envelope, the 4 Bollinger Bands are compressing further. This is a classic sign of interaction density increasing. Movement still occurs, but usable distance shrinks. Candles travel, but continuation does not persist. This creates a very specific behavioral friction. Continuation attempts stall quickly. Pullbacks deepen before stabilizing. Reaction speed increases, and tolerance for positional error narrows. At first glance, a compressed structure might appear uninteresting. But structurally, this type of environment often produces the clearest execution ideas. Because when structure remains contained, boundaries become visible. And when boundaries remain visible, distance expectations become clearer. Instead of trading direction, participants begin interacting with distance between boundaries. Movement from one boundary toward another creates the working range. Failure to hold outside boundaries creates repeated interaction opportunities, and the compression itself increases reaction speed, which means behavioral patterns often repeat inside the same structural corridor. But that environment also demands discipline, because narrow tolerance punishes late reactions, and continuation attempts often stall faster than expected. If the current compression persists, distance between internal boundaries remains limited. Continuation attempts may continue failing near volatility edges. Pullbacks may extend deeper before stabilizing. If displacement eventually replaces rotation, distance tolerance would expand, and reaction speed would slow. But until structural acceptance appears, outside current containment, interaction may continue repeating inside the same corridor.